Good day, ladies and gentlemen. Welcome back to another edition of the Red Folder Strategy and our journaling, journaling process, on all these Red Folder days. So today was CPI, and we printed this lovely up candle, tall candle, and I'm going to show you the markings now. We traded it live, so there's live executions that was taking place here, and nice up candle that gives us a nice high point, low point. And before I put all the markings on, I've looked at, you would normally look at this that this candle's low as the target, but because there was equal lows, these two lows here, I've extended my target to there, and that's where I took profit. What we normally talk about is, we're marking out the high and wait for some aggressive fair value gap that, run those highs, which is this high, that's a spike. It didn't close in this fair value gap, but then we get this nice candle and then the inversion, and didn't give us a good entry here, and we'll look at that right now. All right, let me put back the or before I do that, let me take you guys. Now let me just put it on there, and we can go through it this way. All right, so this is basically what unfolded today. And like I said, that high, this low, that was the buy side target, that was the sell side target. And I've marked out these lows here, and you can go look at my live video that we streamed today, and you'll see exactly what you're seeing here. That's how it unfolded. And this fair value gap inverted, but did not invert 100% for us to try to take an entry here. I wanted to see some aggressive close below and then the retest. I never got my entry up here. It created another fair value gap. Didn't give me entry there, but I entered here when this white candle here, you see I draw a line there. The market came back in, and that's where I took my entry. And the reason I took it there, not up here, I expected this to be a breakaway gap, and if price was going to run up in there, I would happily to take a loss and then take a better price, because I know we're targeting way down here. But price was slow, but it gave us good entries, not up here. It gave us an entry here. It respected that white order block. This up candle order block, it broke away and then came back, and I'll explain this line just now. And it went into another fair value gap, and this inverted fair value gap, it was between two fair value gaps, and I wasn't too happy at that stage. But because we kept pushing lower and making lower highs, I was expecting this to be a lower high, and so on, until we managed to break through our target. But price did, if you're not used to this type of trading, it could have made you somewhat nervous, because 1 minute we're pushing up and it's aggressive pushing, down, up, down, and then it's in between, and then it was enough to for you to sit on your edge of your seat watching this play out. And I even said in my live stream, if this happens and you feel you feel claustrophobic or something, rather just put in your stop, you've got your entry and your take profit, walk away, come back an hour later and see what happened. And I want to take you guys through this section here, which was very important when we live streamed this. And I said to the guys, what normally happens is, if you a smart money trader will look at premium to sell and discount to buy. You will never sell in a discount or buy up in a premium. So I know there's a lot of lines here now, but from this down to this sell side target, that 50% is right in this inverted fair value gap, where, and if I take this off now, you'll see price inverted, and then bodies stayed below that 50%, that dotted line. Then this spike up was just running those stops, and immediately aggressive rejected. That to me showed, all right, so this high is in, and that's would want to go down to our target. I've put my stop there. I've entered up here, so it was in profit over here, and price did come up, and I thought, okay, well, if I get stopped out now, then so be it. And price was holding in this IFEG, and then broke down, inverted another fair value gap, tested those 50%, and then just these red lines here, that's the macro time, and that just squeezed price down properly. So what happened here, we've got a strategy that we follow, but in a retail world, what really transpired here, and what I want to do, before I do that, let me just make it smaller so I can show you guys what I've done here. So if you look at this line here, this is one big trend line, which is liquidity, and it touches, and then we get this aggressive breakout, which is our candle. Now that is normally the manipulation or the false breakout on a trend line for your retail traders, and that was what I was expecting here. When I saw that, I was like, okay, so people were buying, and we're going to see somewhat a retracement back to the a trend line. So you get a breakup, the retest, and then in theory, if you look at it from a retail perspective, then price must go away from that. In this case, I said, okay, we need to keep a close eye because it might bounce here just to trick people and then come back down to stop them out, because they'll put their stops there, they'll put their stops here. Some will even put their stops down here. And that's what the market did. It just manipulated people all the way, and this is, if you were long at this trade, this thing goes lower, you in drawdown. It comes back, it gives you some hope, and aggressively moved away, put you in deeper drawdown. Then aggressively push up and then gives you hope again, and then it goes sideways. Then this big white candle at some stage went there, and you were like, okay, if I get to my entry, I'll just close it. And then aggressively back down, then aggressively up there. So this was just screwing with people's mind and give them false hope, and eventually you're so far down here, you would have get stopped out. And those people who got thought we're still going to bounce from here, basically moved their stop lower, and then eventually got stopped out completely. And that is what we do when we do the opposite. We say, all right, this is what the retail will be thinking, and we're going to do the opposite. And in the same time, we just need to read price action correctly and have the right strategy and the right context as to why price will sell off here. And that is, there's a trend line here that is just a false breakup, and this line up here is equal highs on the daily time frame, and we just run into that equal highs again and then invert from there, reject, and that's a good place to sell off from. And then with all those lower highs, that's liquidity, and price came back up and took all that liquidity out. That's where we are right now. So if you guys still think this is a good strategy, or you're not sure if it's a good strategy, I would like to show you something else. So TradingView has been running this the Leap trading competition, where you've got 30 days to trade handpicks of instruments, which is not NASDAQ, is not one of them. So it's more your other, so euro, dollar, the gold, DAX, some cryptos, and all of that. And what I've done is I've entered this competition, not because of the price or anything like that. So what I want to show you, there's 58,000 traders that trade in this competition. I'm currently under the top 5% of participants. So I made $3,000. I'm up 1.29%. And that is just trading my strategy, and the strategy that I'm showing you guys here. So this is my way of showing you guys. I might be 2,780th place of 58,000 people. I'm not too worried about that. If I can get to top place, then great, I can do that. I would love to do that, but I don't trade every single minute of the day. I take very specific trades, and you can't risk a lot in this competition. So when you risk on a trade, it's less than 1%. So you can only grow your account so fast. But the thing that stood out to me is that I am under the top 5% of the participants in this, in this competition. So it's not like I'm sitting, I don't know, 50th percent or the top, I don't know what, but it's the top 5. So 95% of traders, the strategy is beating 95% of other traders, their strategies, and so forth. So I wanted to share that with you guys, not to tell you to trade the strategy, but just to show you that this is a real strategy, and this is not something that might work, might not work. Last week was elections. There was lots of news. It was a mess, the market. So the opportunities wasn't there. So if you were trying to force trades, you would have lost money. And there was a day or two where I tried to trade, did some trades, and then I just gave up because the market was just not stable enough, and it was all over the place. But now it's CPI, tomorrow's PPI, hopefully we get another nice setup tomorrow. Hopefully you guys find value in this video. Check out my live stream from earlier, and let me just show you guys my entry so you guys can see it. So I sold up here and I took profit down here. That's 1,700 and something dollars in profit. And so give it a like, give it a share, leave some comments, have a look at my live stream and see what my thoughts were while I was trading this. And hopefully we get something tomorrow that stands out and plays out much better than today. And be safe, and speak to you soon. Bye bye.